what's going on, people, and welcome back to my YouTube channel. In today's video, we are going to be talking about a less mentioned ICT topic. The term is called TGIF, which basically stands for Thank God It's Friday. It's an odd name, but once you learn this, you can increase your win rate on Fridays by a lot. I personally used it to get a 1 to 7 this Friday, so that is what we're going to be looking at today. So I'm quickly going to go over what TGIF is. Basically, it is something that we use as a confluence on Fridays to kind of figure out where the market is going to go, okay? Now, you only look for it during very bearish weeks or very bullish weeks, okay? So for example, here we had a Monday that was bullish, a Tuesday that was bullish, then Wednesday was bearish, and then Thursday was bearish, and then Friday was bullish, right? So in weeks like this, we do not use TGIF, but this week was very bearish. As you can see, Tuesday bearish, Wednesday bearish, Thursday bearish, right? So TGIF basically means that you can expect after a bearish week like this, that Friday is going to retrace back to 0.20 to 0.40% of the range, which is 20% of the range to 40% of the range. And we measure this with a Fibonacci, right? We draw it from the week beginning to Thursday. And then once Friday opens, right, I can expect it to pull back into this level here, around in between the 0.2 and 0.4% Fibonacci. Okay, when we have bearish weeks like this, right, we had Tuesday bearish, Wednesday bearish, Thursday bearish. When this happens, there's about a 75% chance that we are gonna on Friday retrace back to 0.2 to 0.4% of the range, or 20% of the range to 40% of the range, which happened, right? We came up into 20% of the weekly range, and I capitalized off of this, which we are also gonna look at. Another great example is here. Monday was bullish but a bit indecisive. Tuesday was bearish, Wednesday was bearish, Thursday was bearish. Now we can expect Friday to pull back up into 20 to 40% of the range. And what did it do? It came up to about 30% of the range or so, right? And this is important because we can use this on Fridays to kind of give us an idea of where the market is going to go. And a lot of people get their bias wrong on Fridays during a week like this, because since we have been bearish for the whole week, people come into Friday expecting bearish momentum too. And that is because they don't know of this term, right? They don't know that there's about a 75% chance that that Friday is gonna go higher. And as you can see here, very bearish. And then we came up into 20 to around 30% of the range. We can see it again here on a bullish week. Monday bullish, Tuesday bullish, Wednesday bullish, Thursday bullish. Then we now expect Friday to pull back into 20 to 40% of the range, what we did, right? We hit the 20% level of the weekly range. But I can guarantee you that a lot of people came into this week and got stopped out going long because they got their bias wrong, right? So let's take a look of my performance here on Friday. So originally on Friday, when I came into the marketplace, I wanted to see us pull into this fair value gap, right? What is price drawn towards, inefficiencies, and liquidity, right? So I expected us to come into this fair value gap and then retrace back into 20 to 40% of the weekly range. So here on Friday, I did not place any trades before we hit this daily imbalance, okay? And then after we hit this, I expected us to pull back into the 20% to 40% of the weekly range, which we did, right? So let's go over the trade that I took. So as you can see, I actually did place 2 trades. I had one here, which was a break-even trade, and then one here, which was a no drawdown clean trade, which I exited here, right? And I came into Friday bearish until we hit that gap. And then I was expecting that TGIF retracement back up into 20 to 40% of the weekly range. At this point, we had already hit that gap, so I was bullish. And so what I noticed was I took out my optimal trade entry tool here, and that 0.6% Fibonacci level is oftentimes a reversal point. And then I also noticed that we had a low here, a very significant low here that I wanted to see get taken out before we came up higher. And then I also used something that I have been experimenting with, which I'm probably going to get a lot of hate for by some ICT people, but is this what's it called again, fixed range volume profile, I think. Yeah, fixed range volume profile. And basically I use this volume as a confluence because I've noticed that these gaps in between the volume can act sort of as support or resistance. So I saw that we had this gap here, right, in the volume that aligned with the optimal trade entry 62% Fibonacci level, and we had a low here. So I was anticipating this low to be sort of a turtle soup and then retrace up higher, which worked out perfectly, right? My entry was right here and we exited it at these highs here. Okay, now you may ask, why not these highs? Because if these highs are going to get hit, there's a 99.99% chance that these highs are also going to get hit, right? So basically the reason why I was able to take such a clean long trade was because I knew that we were likely gonna retrace back up into 20% of the weekly range. Had I not known about this, I would have came into Friday bearish and I would have not looked for any longs. But because through historical data, we know that Fridays are often reversal and are gonna retrace back up into 20 to 40% of the weekly range, which ICT calls TGIF, or thank God it's Friday, right? I personally find that Fridays are some of the easiest day to trade. I know a lot of traders don't trade on Fridays, which I personally disagree with completely. As you can see, Fridays are always good for me, and that is because I know of this concept, right? Keep in mind that it is only 75% accurate, so sometimes on Fridays you may just be fully bearish even though you've been bearish the whole week. So like nothing in trading, it does not have a 100% win rate, but it has a high probability of retracing back into that 20 to 40% range than not, right? And that is what we do as traders. We trade probabilities. So that was it for this video. I apologize for not posting as much recently, but I have been very busy. I decided to record this video because I don't see TGIF get mentioned a lot, and I think it is so valuable, and a lot of you could benefit from this and avoid a lot of losses on Fridays. So I hope you enjoyed, and I hope you learned a thing or two. If you are a new ICT trader and you are confused around all this terminology, I created a Google Docs document which I call the ICT dictionary, and it is basically just me explaining what all of this different terminology means with examples. It is completely free and you can use it in the description. So yeah, I hope you enjoyed, and I will see you in my next video. Bye bye.